How to start a year with good personal finance. Hello and welcome to this comprehensive instructional video on how to start the year off with good personal finance. First, it's important to set financial goals for the year. This could be saving a certain amount of money, paying off debt, or investing in a retirement account. Make sure these goals are specific, measurable, achievable, relevant, and time-bound, otherwise known as SMART goals. For example, instead of saying I want to save more money, you could say I will save $10,000 over the next 12 months by setting aside $834 per month. This goal is specific, measurable, achievable, assuming you have the income to do so, relevant to your financial situation, and time-bound. It's very important that your financial goals are relevant to your overall financial situation and priorities. For example, if you have a lot of high-interest debt, it might make more sense to focus on paying off debt rather than saving for a down payment on a house. Finally, it's important to give your financial goals a time frame. This will help you stay on track and motivated to achieve your goals. Some examples of financial goals include saving a certain amount of money, paying off debt, or investing in a retirement account. Make sure your goals are specific, measurable, achievable, relevant, and time-bound, and you'll be well on your way to starting the year off with good personal finance. Once you have your financial goals in place, it's a good idea to create a budget. Start by tracking your income and expenses for a few weeks to get a sense of where your money is going. Make a list of all your fixed expenses, such as rent or mortgage payments, car payments, and insurance premiums, as well as variable expenses like groceries, gas, and entertainment. You can use a budgeting app or spreadsheet to help you keep track of your spending. Creating a budget is an important step in managing your personal finance. A budget helps you keep track of your income and expenses and ensures that you have enough money to cover your essential expenses and meet your financial goals. Once you have a good understanding of your income and expenses, determine how much you can realistically save or put towards debt each month. It's a good idea to pay yourself first by saving a certain percentage of your income before paying your bills. For example, you might save 10% of your income each month before paying your other expenses. It's important to be realistic when creating your budget and to allow for some flexibility. You may need to make adjustments to your budget as your income or expenses change throughout the year. By creating a budget and sticking to it, you'll be able to better manage your personal finance and reach your financial goals. It's also important to have an emergency fund in case of unexpected expenses. Aim to save at least 3 to 6 months' worth of living expenses in a separate, easily accessible account. This way, you'll have a cushion to fall back on if you lose your job, face a medical emergency, or need to make a large unexpected purchase. Having an emergency fund is an important part of good personal finance. An emergency fund is a separate savings account that you can use to cover unexpected expenses that may arise, such as a medical emergency, a car repair, or a job loss. To build up your emergency fund, consider setting up automatic transfers from your checking account to a savings account specifically designated for your emergency fund. You can also try to cut back on unnecessary expenses and put the extra money toward your emergency fund. It's important to keep your emergency fund separate from your other savings accounts and to only use it for true emergencies. This will help you avoid dipping into your emergency fund for non-emergency expenses and ensure that it's available when you really need it. By having an emergency fund in place, you'll be better prepared to handle unexpected expenses, and you'll have one less thing to worry about when it comes to your personal finance. Consider automating your savings by setting up automatic transfers from your checking account to a savings account or investment account. This way, you won't have to remember to transfer the money manually, and you'll be more likely to stick to your savings plan. You can also set up automatic bill pay to make sure your bills are paid on time and you don't incur late fees. To automate your savings, you'll need to choose a savings account or investment account and set up automatic transfers from your checking account. You can choose how much you want to transfer and how often you want the transfers to occur. Many banks and investment firms offer this service, so you'll need to find one that meets your needs. It's also a good idea to set up automatic bill pay to make sure your bills are paid on time and you don't incur late fees. This can help you avoid missed payments and protect your credit score. Automating your savings and bill pay is an easy way to streamline your personal finance and make sure you're consistently working towards your financial goals. Next, it's a good idea to review your insurance policies to make sure you have the coverage you need. This includes health, car, home, and life insurance. If you don't have insurance or your coverage is insufficient, you could be on the hook for large unexpected expenses. Make sure you understand what your insurance covers and what it doesn't, and consider increasing your coverage if necessary. Reviewing your insurance policies is an important part of managing your personal finance. Insurance helps protect you and your assets in case of unexpected events, such as a car accident, a medical emergency, or a natural disaster. When reviewing your insurance policies, make sure you understand what your insurance covers and what it doesn't. You may need to increase your coverage if you've had significant life changes, such as getting married, having a child, or buying a new home. It's also a good idea to shop around and compare quotes from different insurance companies to make sure you're getting the best coverage at the most affordable price. You may be able to find discounts for things like having multiple policies with the same company or having a good driving record. By reviewing your insurance policies regularly, you'll be able to make sure you have the protection you need and avoid unexpected financial burdens. If you have high-interest debt, such as credit card debt, it's a good idea to focus on paying it off as quickly as possible. One way to do this is by making more than the minimum payment each month, or by transferring your balance to a credit card with a lower interest rate. If you are having big trouble paying off your debt on your own, work with a financial planner or debt counselor. They can help you create a plan to pay off your debt and advise you on the best course of action for your specific situation. By focusing on paying off high-interest debt, you'll be able to save money on interest and improve your overall financial situation. If you're not saving for retirement, now is the time to start. Even if you're young and just starting your career, it's important to take advantage of compound interest and start saving as early as possible. Consider opening a 401k or IRA account and contributing a certain percentage of your income each month. If your employer offers a matching contribution, make sure to contribute enough to take advantage of the full match. To start saving for retirement, consider opening a retirement account and contributing a certain percentage of your income each month. If your employer offers an additional contribution, make sure to contribute enough to take advantage of the full match. By saving for retirement early, you'll be better prepared for your financial future and can enjoy a more secure retirement. Finally, consider seeking out financial education resources such as books, online courses, or a financial advisor to help you better understand personal finance and make informed decisions about your money. There are many resources available to help you. Some options for financial education include books, online courses, and financial advisors. Books and online courses can provide a wealth of information on topics such as budgeting, saving, investing, and debt management. Many libraries and online retailers offer a wide selection of financial education books, and there are also many online courses and tutorials available for free or at a low cost. Working with a financial advisor can also be a good option if you want personalized advice and guidance. Financial advisors can help you create a financial plan, invest your money, and make decisions about your money based on your specific financial situation and goals. By seeking out financial education resources, you'll be better equipped to manage your personal finance and make informed decisions about your money. Thank you for watching this video, and I hope that the information provided is useful for you. You may want to consider subscribing to my YouTube channel for more helpful tips and information on managing your finances and improving your overall financial well-being. Subscribing to my YouTube channel will allow you to stay up to date with the latest financial tips and information, and can help you make informed decisions about your money. Don't forget to subscribe and stay on track with your financial goals.